Hey there, Roman here, co-founder of Overseas DeFi. And if you've been following along lately, you've probably seen me talk a little bit about decentralized finance, the yield that some of my clients are generating, and how the space can actually work if you approach it the right way. And now we're launching something new that I'm really excited to share about. The goal here is simple: full transparency without any hype. And definitely none of that Lambo bro crypto energy where everything always goes up, nobody ever loses. We're here to show you everything: the exact wallets that we're set up with, the strategies that we're utilizing, the pools that we're in, the yield that we're generating, and we're going to show you the whole picture: the wins, the losses, the drawdowns, the mistakes, all of it. And to back this up, we've opened up a real wallet. We're calling it the Overseas DeFi wallet, and we funded it with $20,000 to start. So each week, we'll walk you through exactly what we're doing with the capital, where we're lending, where we're borrowing, what pools we're in, where we're collecting fees, and what kind of results we're seeing. And when something doesn't work, you'll see that part as well. Now, this is part one of the series, and in just a second, I'm going to show you how we funded the wallet, where we've deployed so far, and what the strategy looks like going forward. And just to be super clear, this isn't financial advice. We're not here to tell you what to do with your money. This is just us sharing what we're doing, what we're learning, and what we're seeing. There's real risk in this space, and we're going to talk a lot about that. But if you're sitting on crypto and not earning anything, it might be worth paying attention and seeing this make sense for you. So let's jump in. All right, so right now I'm in my Coinbase wallet and I've transferred $20,000 in USDC from my bank account. Now, the first thing that I want to do is I want to convert that 20K in regular US dollars into USDC, which is a cryptocurrency that's pegged 1-to-1 to the US dollar. Think of it as a digital dollar. It's stable, it doesn't fluctuate in price, and it lets you move quickly across crypto networks. So once I convert it, I'll have $20,000 in USDC, and now I can send it to the Overseas DeFi wallet. Now, to do that, I head over to my Rabby wallet and I grab my public address. That's basically my crypto account number so I can receive the funds. Then I'm going to go back into Coinbase. And once I'm in Coinbase, I'm going to hit send. And then I'm going to paste that address in and make sure I do this correctly. And one super important step here is to choose the right network to send it over. If you choose the wrong one, your funds could get stuck or even lost. So make sure that you get this part right. Now, in my case, I'm going to be selecting Arbitrum because the Arbitrum network is fast, it's inexpensive to use, and the liquidity pool opportunities I'm entering are all happening on Arbitrum. Now, once I select that, I type in the $20,000, hit preview, hit send, and then once I've sent it, I'm going to go back into my Rabby wallet, I'm going to hit refresh, and wait for the funds to arrive. And just like that, the Overseas DeFi wallet is now funded and ready to go. All right, so after funding the wallet with the $20,000 in USDC, as you guys see here, I took $10,000 and I bought wrapped Bitcoin with it, and I took the other $10,000 and I bought Ethereum with it. Now, wrapped Bitcoin is basically Bitcoin. It's just wrapped so that it works on the Ethereum blockchain, but it has the same exposure. It's just a little bit more flexible for what I'm doing with it here. Now, the reason I chose Bitcoin and Ethereum is pretty simple, and it's because I believe in the fundamentals of both assets. So I think Ethereum in particular is setting up for a really big move because DeFi is being built on top of it. And big institutions are exploring how to tokenize things like real estate and securities, and they're doing it on Ethereum. And there's a ton of capital flowing into it, and I think the long-term use cases just make sense to me. So I'm placing a bet that both of these assets, Ethereum and Bitcoin, are going to appreciate over time. But while I wait, I don't want to just sit on my hands. So I put that $20,000 of BTC and Ethereum to work for me by lending it out on a protocol called Aave. And Aave is basically a decentralized lending platform, and it lets you earn interest by lending your crypto. And more importantly, it lets you borrow against your assets by using them as collateral. So here's what I did. I lent out $20,000 of Bitcoin and Ethereum, and I borrowed $10,000 worth of USDC against it. Now, USDC, as I mentioned earlier, is what's called stablecoin. It's a digital dollar that stays pegged to the real US dollar. It doesn't move in price, and you can use it to send money, to trade, to pay for things, or in my case, enter yield generating opportunities. Now I'm in a position where I'm holding Ethereum and BTC, And as it appreciates, so does my portfolio. But at the same time, I'm borrowing funds against it and using those funds to generate myself daily cash flow. So I get the best of both worlds. I get the appreciation and that monthly salary that I'm building for myself. Now, in this case, I took $9,300 of that borrowed USDC out of that $10,000, and I deployed it into a strategy that's going to be earning me 5 to 10% a month. Or at least I hope it will be, and we're going to find out together as we go along in this journey. Now, let me show you where I put it. So, right now, I'm on a platform called Crystal. And think of Crystal like Expedia.com, but for yield opportunities. So instead of looking for flights or hotels, you're browsing DeFi opportunities across different blockchains, different assets, and across a variety of different strategies, but you're doing it all from one dashboard, all from one place. So that's why it's like Expedia. It makes it really easy. Now, since I'm a big believer in ETH, I want to enter an ETH USDC liquidity pool, and that's what I ended up doing, where I can earn fees every time someone swaps Ethereum for USDC or vice versa. And here's a simple way to think about it. Imagine you're at an airport currency exchange booth, and every time someone swaps one currency for another, there's a fee that's generated. And that booth needs inventory, needs cash to make those swaps happen. Well, I'm providing the inventory. I, along with other investors, stock the booth. And in this case, we're stocking it with Ethereum and USDC so that people can trade. And every time they do, a small fee is generated and I get a cut of that fee. That's how I generate yield in the space. Now, once I select the Ethereum and USDC pool, I want to set my price range to 4,200 and 4,700, which just means that I'm willing to provide liquidity as long as ETH stays between that $4,200 to $4,700 price range. And as long as it's in that range, traders are using my funds and earning fees. So right now, my $9,300 position is earning about 7% a month, or expected to earn about 7% a month. We'll actually cross-reference and see what my actual results look like, so we can see if it's a little higher, a little lower, and get to the bottom of it. But I have a hunch that we're probably going to beat that, and we're probably going to be around 8 to 12% per month. But again, we'll track it together and we'll see. And I'll show you the results from the last few days in just a couple moments. But moving forward, I'll be updating you guys weekly so you can follow along and see what it actually earns day by day. But that's not all I'm doing. I also leverage my existing position using a protocol called Revert. Now, Revert is similar to Crystal in the sense that it helps you manage your liquidity positions, but it also gives you the option to leverage them. Now, what this means is I can borrow additional USDC against my current liquidity pool and inject that right back into the pool so that I can start earning 5 to 10% yield on a larger amount of capital. In this case, I'm going to be borrowing about 5580, which brings my total deployed to around 14,800. So I'm going to go from about $9,300 to just under 15,000 by leveraging it by 1.6x. And the UI on Revert makes it super intuitive. It's also super important to note it stays liquid, which means if I ever want to unwind the position, I can do so quickly and efficiently without any lockups, no complicated exit flow. Now I want to approve the position, and I'm going to approve the lend. I'm going to sign for it within my wallet. It's going to take a second. And now I'm going to refresh my screen. And now you can see the new total of $14,873 deployed. And check this out. The APR right now is showing about 356%. That's because trading volume is really high at the moment. So fees are spiking and the pool is paying out more than usual. I don't expect that to last. And I think this is going to likely come back down to somewhere around 100 to 120% APR, which is right in line with that 8 to 10% per month target that we're aiming for. Either way, we'll keep tracking this together, and I'll show you exactly how it performs over time. So now let's jump in and take a look at the performance over the last few days. As far as the performance of this pool, we can track it directly within Revert, and I also have a spreadsheet. We can compare the two to make sure everything's accurate. To summarize what's been done over the last few days, on August 29th, we deposited that $9,300 from our private wallet. So keep in mind, we lent $10,000 of Bitcoin, we lent $10,000 of Ethereum, and then we borrowed $10,000 USDC. And out of that $10,000, we deployed 9,300. We then borrowed an additional 5,500, which is what I was just showing you, using that leverage functionality. And we withdrew on the 2nd of September, $196 in fees. And on September 6th, we withdrew $174 in fees. Let's see how this lines up and what our actual monthly yield is based on these numbers. So if I go to my portfolio tracking sheet that I created, you can see on August 29th, we deposited $9,300. We leveraged it by 1.6x. And on September 2nd, we have $195 in fees that we withdrew. And on September 6th, $173 in fees that we withdrew. So this lines up perfectly with September 2nd, 196. So we're off by about 30 cents. This is overestimating it by about 30 cents. And on September 6th, it's overestimating it by about 40 cents. And if you look at, we're on track to make 14% on our money within the next 30 days. So keep in mind, our principal here is $9,300 that we've deployed, and we're kicking butt. We're above expectations right now. We're doing better than that 8 to 10% that I was hoping for. Right now, we're sitting at 14% for the month. And this number will fluctuate, but if things keep going like this day after day, we'll be on track to do 188% for the year. So stay tuned, follow along, and I'll be providing even more details in our next update. So that's the wallet, that's the strategy, those are the pools that we're currently in, and this is just the beginning. Every week we're going to be pulling back the curtain and showing you our strategy, the type of yield that we're generating, where we're moving our money. But please note, none of this is financial advice. We are not recommending you follow anything that we're doing. And this is purely to educate you on decentralized finance. So I appreciate you listening, and we'll catch you in the next.